Good afternoon, everyone, and welcome to Wednesday, April 8th, 2026 Trading Trends with John Salama, CMT here. Boy, did a lot happen in the past, 24 hours. The ceasefire happened. Let's just get into the doc. Portfolio moves. I am cleared out. Obviously, got stopped out of long Brent oil. We've been looking at that chart. One of the biggest movers lower today, of course, on the ceasefire, the 2-week ceasefire, as well as got out of my bond short and the software short. So, letting the dust settle. We'll take a look at the intraday chart and everything that's been going on. Of course, there is a lot to see here. And again, even if you knew this was happening, let's see, there's a lot of movers I could have talked about here to the up and down side. We're going to focus on the biggest standard deviation movers, the most, caught off sides, if you will, institutionally and in terms of retail. So as we recap the first half of the day here, 1 o'clock p.m. Eastern time, China, regional banks, and home builders. When you had this move here in rates, regional banks and home builders, I think rate cuts are now possibly projected to happen here end of the year. And then, of course, rate relief. So the home builders jump. We'll take a look at all these charts. And China, specifically the ASHRs, really ripping more than 3-4%. We'll take a look. And, of course, energy, oil, and volatility, massive drop, multiple standard deviations. And this is interesting, new all-time highs for the semiconductor. So a lot of enthusiasm. We'll see if the charts agree in terms of what SPY is doing, but a new all-time high for the SOXX, and I believe new 52-week highs for SMH. Or actually, new multi-month highs, I think, for SMH. But really, the gains here in SOXX, Micron's having a massive day. So we'll take a look. We'll do that. Let's get into the dashboard panel, and we will take a look-see here at what is moving right here live. Some interesting things, as always, right? Here we go. You should be seeing the screen now. Okay, really fast. SPY up 2.6% right here live. Q's up 3.25%. Nvidia up 2%. Micron, my goodness, the best stock in the world, up 8% today, up 42% this year, up 516% year over year. What else can you say? IWM up 3.1%, just a hair underneath. Q's that is now up 6% on the year. Don't forget, SPY is down 1.33% on the year. Broadcom basically up 5%. Google up 4.5%. Intel up 10.5%. And hence, as I say, the semis are absolutely running the show today. Risk on in that regard. Microsoft up almost 2%. It's had an awful year, down 22%. Meta up a massive 9%. Still down 10% on the year. Amazon up 4%, down 4% on the year. Apple up 2%, down 5% on the year. AMD up 5%. Up 8% on the year. Palantir, again, defense tech not getting that bid here. Anything defensive that was supportive during the Iran war for the past 4 or 5 weeks is being unwound today as it got a little bit too rich. Palantir down 17% on the year. Taiwan Semi, loving the semis today, up 6%. It's up 20% on the year. And that's it for the dashboard panel. Let's shut this for a second. So interesting stuff. So last night at 6:30, Pakistan was asking Trump in the White House for 2-week relief ceasefire. I'm sure you've seen the news by now. And at that moment, at 6:30 p.m., SPY went from 656 to 673 in minutes, and we continue to ramp up. And this is interesting, and I want to see how the afternoon closes, of course. And this is when you get myopic, and I'm really in the weeds here. We peaked at 7:30 a.m. There's nothing wrong with that. They took the open at 9:30 to get that liquidity, and they sold into it. And actually took us from 677 to 674. And folks are saying, who cares? We're still up 2.5%. I know. I just always like to watch the internals, of course, and see where VWAP is headed. And we were headed lower, and we actually bottomed intraday at 10:30 a.m. at 671.5 in SPY. And then it had, after the European close, which just happened, Europe absolutely on fire today since Brent oil is being, down by about 15%. We'll look at the chart. It's a huge benefit to those European firms. Of course, emerging markets had been the play going into the Iran war. So we'll see if that continues. I think it does. And now we're finally, as of that European close around 11:30 a.m. Eastern time, we're holding VWAP. VWAP early here, 674.70. We're at 676.10 here. The high, as I said, pre-market came at 678.15. Let's zoom out here. So last thing, they have been buying since 11 a.m. They took the first hour and a half, hour or so to sell, and then at 11 o'clock basically came the bottom. They've been going higher. Let me zoom out, as that is a little bit more importante. So here is SPY as we zoom out. I know folks always like to apply duration. Was that a bear market that we were in? It's pretty eerie, and I had alluded to this a couple weeks ago. I said, wouldn't it be funny if the algos literally find the exact same playbook, and we have that intermediate low right around mid-April. And the actual low last year was April 7th, and today's April 8th. So it's pretty interesting. The bear market, whatever you want to call it, the correction began March 19th. And now, as of today, we leapfrogged, obviously, above the 200-day moving average. That very important level is still 663.5. We'll call it 664 for simplicity's sake, about $11 away from here, just inside of 2%. I had been talking before about a soft bullish accumulation phase that I would see continuing through this week. I didn't think we were going to get this high up. I wanted to see, and I talked about this on the Monday video, I wanted to see us hold 660 and then see if we have enough to get above that 664 threshold, right, of the 200-day moving average. We're above 50 RSI. The buyers are in control. The most they had been here at a 58 RSI. We haven't been above this since about 2 weeks before the all-time highs. We haven't been, this much exuberance. Stochastic momentum is higher. We've had now green days in a row. It's always funny how the smart money knows before, right? You can argue. I don't know if it's Barron Trump placing bets. Obviously, the huge candle yesterday in the last 30 minutes of trading looks like somebody knew something. But that bottom here, we moved our cement-like support that used to exist here at 670, and now it's around 630. If you remember, that goes back to those July highs from last year. So for SPY, I still have an absolute, if we get to the top upper Bollinger Band and we get to upper resistance, that would take me to about the 680, 685 level. If this continues, I really want to see how the afternoon goes. I'm going to let the dust settle. I will very likely buy SOXX. And don't forget, earnings are starting next week. JP Morgan kicks off earnings, so you are absolutely going to listen to what all these companies with the financials kick off next week. We are in earnings season, so they're opposed to what happens for the next 2 weeks. They're measuring traffic in the Hormuz Strait. We're going to see things like that. Are the tankers really going through? How much volatility and unknown is there for firms in terms of guidance next quarter, so on and so forth. So we'll see. The worst technically not over, but a huge gap down in energy. And we talked about this, I think, on Monday, like I said, about oil, where it should correct to. And we'll take a look exactly where it came down to. But again, you got to if you're long here, we are hitting new highs in terms of RSI for the first time in 3 months, basically above a 55 RSI. So quite strong, rising 200-day moving average. Will this have been a 3-week correction? Possibly. We'll see. But we need to go, obviously, see what happens higher. Again, this rally, this is very off cycle in terms of the normal 15-day on, 15-day off acceleration, accumulation versus distribution. But, technically this started on the 30th in terms of that low. So if things were normal, in a normal world, you would see almost more bullish, animal spirits exuberance for the next week. And that could take you, if things get really, really bullish and people chase, they're not really been chasing today, but I want to see how the close is, especially that important power hour, 3 to 4, 3:30 to 4. What are those advisors getting from their clients? Do they have to be in these orders by the end of the day? Are folks chasing stocks? Are they getting back to the emerging markets trade? I want to see how that goes. And we'll take a look at the most important charts of the day, arguably next, to see what's looking like in the internals. But that's pretty much it for SPY. Maybe a little bit more runway due to it just being early and folks don't want to be late. But I see us running out of breath. It's kind of interesting around that 680, 82, 85 level, right around there. And don't forget, the all-time highs are at 698. So yes, we are just, $23, just a handful, 3% away or so from new all-time highs in SPY. So life comes at you fast, get a helmet. So probably a little bit more. That's the candle on the day. And like I said, VWAP is being held right now. Let's take a look at the charts. The big movers, we're going to go to the upside first. China, huge. And they, have kind of differentiated themselves in terms of energy supply, and they're rushing in here to buy China, up 4.2%. This is one of the biggest standard deviation movers on the board today. I see this continuing. They kind of rejected the high today. They are holding at VWAP right this second, up 4.2%. The high was 33.77. We'll see how that closes. I think this wants to go a little bit. My target for this is right around 34 even. Don't forget, the 52-week high for this is 34.59. I do think it gets to 34. This would be not a horrible place to, I don't want to say chase, similar, almost exact, identical RSI to S&P 57. Has look at that, no days under the 200-day moving average going back all the way since June. So arguably a stronger chart, albeit, it looks like potentially lesser returns, in the past 3-6 months, although SPY did a lot of churning too in a rectangular formation. The support looks like it held here at the 200-day moving average right around that 3180 level, and it held. I like this. I don't think there's a ton more to go short term. I think this has a bullish accumulation for the next week or so to about 34. You could do, this isn't super liquid in the options chain, but you could probably buy the 34 calls, and I would diagonalize it, probably buy the Mays. This could be more short term. I would have to check the liquidity. I don't want to buy, do anything 0 DTE. You might even just want to outright buy the stock. The ATR on this is 53 cents. You can get in right here, and if it reverses against you by about $1.06, truly, if it goes down to 32.50, get out, because it's likely headed, potentially 32 or even 31, probably 32 to the 200-day moving average. So you want to save yourself that 1.5%. Otherwise, if it goes to the upside, you do capture that next 45 cents of upside. So that is China here. I think that continues. You're going to have some interesting setups, I imagine, going forward. China, specifically the A-share. I'm not going to pull up FXI right now because A-share looks like the belle of the ball. Looks like it has about another week, and really a very strong decent chart. I want to point that out. Holding a 200 moving average, hasn't stopped doing that since last summer. So there are finer, definitely worse places you can be than A-share. Let's take a look at the regional banks, killing it today, obviously, with the relief in rates. KRE 52-week highs February 9th at 74. This had a bit worse purgatory with several closes underneath the 200 moving average from March 12th through March 30th. So about 2.5, almost 3 weeks in purgatory here. And then interesting candle. Again, that's why I want to see the close for a lot of these instruments. Right here, view up on the day, 60.82. It's not holding that, although above, a robust up 2.8%. The highest RSI since it was overbought the day of the 52-week highs in regional banks. I had been sure I covered this last Thursday. In terms of upside, again, I'm seeing, probably it seems like folks want to chase this move a little bit more. I don't know how bullish and chasey they want to get over the next 2 weeks in the ceasefire. Does everything happen all over again? Or is there, a definitive plan in place, and there's new leadership in Iran, so on and so forth? I don't think that geopolitical risk premium is absolutely removed just yet. But this, to be honest with you, my full target for KRE is 68. This, you see, typically, like the market overreacts to the upside and to the downside. So right here, we're above the upper Bollinger Band. It typically doesn't have more than 2 or 3 days of that. And my target for this, as I said, is 68. It's above it by 1% right here. I think maybe they're potentially sniffing that out with it not holding VWAP on the day. So we'll see. This one's been a little bit, choppy, but resolving higher pretty much each time. After is where I want to see these markets, where they consolidate to, where do they correct to softly over the next 2 weeks as we wind down the ceasefire. To me, this looks like it could fall back to, within a rock's throw away of the 200-day moving average. I think, in terms of probabilities, which is what we're, paid to do here, this could consolidate to the 21-day exponential moving average right around 65.5, which is just a hair above the 200-day. So in terms of, short term, kind of like China, in terms of just looking at the charts, in terms of upside short term versus a regional bank, I don't want to outright just, sell upside or strangles on this here. I think it probably, as I said, stays where it is, probably after this move to the upside is done. Don't forget the traffic here, the resistance here, 69.5 to 70 has been an important level after the breakdown here. So we will take a look. I like China a little bit more than this regional bank chart, but good to see them resolving higher. And then, of course, with the rates relief, home builders absolutely on fire today. Let's take a look at this chart, up 6%. 5.6% for the home builders. But look at this. Housing is just frozen. It's not really a growth part of the market at all. XHB, the home builders peaked. I think Home Depot actually just hit 52-week lows several days ago, a mix of retail weakness plus the housing having to thaw. But this peak basically February 12th, a couple of days before Valentine's Day, and ironically, it's not been getting any love since then. It has fallen under the 200-day moving average officially on March 6th, just a couple of days after the war. And good support here at 95. We had mentioned this a couple of weeks ago too. I was checking my notes, and we had thought that was going to hold. We wanted to see rather what happened at 100. It had a couple of dollars to give. We are curious if that $98, $99 actually support was going to hold. And as I said, overreacts to the upside and to the downside, has actually slipped all the way to oversold territory and then held at $95. And now still under a rising 200-day moving average. That old support seems to be now resistance at 108 in terms of the short-term tactical forecast for home builders. I mean, it's good to see holding 101. That's a 21-day exponential moving average. But in terms of the heaviness, if this gets exuberant like the other parts of the market, I still only see it getting as high as 107 and then failing. So personally, I would almost be attracted. It's kind of a risky trade, but I'd want to sell the 108 calls, and I think you'll get paid for them. Only use that if you have, you need to express a bearish thesis part of your book. I think home builders is not a horrible way to go. Again, staggering here at a right around 50, 51 RSI, has not been above that since the week of its 52-week highs back in late Feb. So home builders, I think overall, just in terms of the overall market, not the first place I want to rush into. This looks like kind of, short-term relief bounce that, again, began at $95 here at 102. And in terms of the VWAP on the day, it is basically at it right here, 102.35 essentially. So that is it for home builders. Those are the biggest moves of the day. So China, I think that's got a little bit more to go. Not a ton more, but a percent more upside. Regional banks, we just went through it. And then home builders, I kind of don't hate the idea of selling 108 calls, expiring April. And of course, in terms of the risk environment, don't just outright sell options. I would always do a spread so you could sleep at night. So if you're going to sell the 108 calls, buy the 109s against it. Okay. Let's look at the losers, and obviously they're all from the energy complex. Energy, the biggest loser on the board here, down 4.5% for energy. Highs 63.5 just a week or so ago, and then boom, we are at the lowest RSI since basically when we were, trading in this rectangle back around Christmas, when we were waiting and waiting and waiting. When's energy going to get going? And that's where the RSI has dropped to today. It's interesting in terms of 15-day cycle on off, although we're not in a normal environment. I would say kind of the inverse of what we said for the market, maybe another week or so of bullishness. And then that would extrapolate to another week or so of bearishness for XLE. But I do think here we're trading $57. Again, don't forget the 21-day exponential moving average on this puppy is 59. So we're underneath that. A beautiful hold today, right there down to the wire of the 50-day moving average. That's what you want to see out of a star performer here. This, I believe, will base, you're going to have to see headlines and all these things, if there's any, missiles happening in Tel Aviv or Tehran or all that being intercepted, what you're reading on the, on X and seeing on the news. I think this will hold this 56 floor. I think it's going to base over the next several days to a week, and then it will set up a buy, dollar cost average into. I wouldn't make all one purchase on one day. But don't forget the low today was 56.19, and they've got it off the mat quite a bit, and it's trading above its VWAP 57.11. It's above that. I know it's down 4.5%, but it's good to see the buyer step in. Don't forget, energy is not an area where many folks are invested, as it's not overly invested in the S&P or international emerging markets, which is called a lot of the flavor. After I do believe XLE bases around the 56 mark, looks like I believe it will try to etch a recovery to the $59 level. And then we'll see if it ultimately takes out, new highs in, say, the May month above $62. But I do think this tries to base right around 56 in the next several days. Now let's get to something a little bit more volatile. USO down a massive 11.5% last I checked. Yeah, 11.25%. Boy, oh boy. We had talked about this before at the highs, and we said, wow, there's a bearish divergence here. Still good to see a 71 RSI, but that we hit highs just yesterday on this puppy. And, we say from that, be careful. You can quickly get a move down to the 21-day exponential moving average. And that's exactly what happened. We went from 141 yesterday all the way down to a low of 118 today. Crazy. It's hard to chart things like this. The RSI, by the way, is still 55. We are still above. It's not an awful place to park some cash. Obviously, it's on sale today by 11%. I would be careful, though, in this right here. I think it has got a little bit more to give. It's a good-looking candle, this Dragonfly Doji today. View up 121.27. It's holding that by $1. It's off the lows. This thing pierced 118 today. It's down there. It's actually $1 away from new highs on the day. I know it's down 11%. Bloodbath. I got you. But don't forget, the relative strength versus SPY in this since the end of January have been amazing. And last I checked, the war started at the beginning of March. So this precedes the war. This was after the strength in this began. Look at my chart right here after we broke out the week before the war. And again, smart money always knows. But again, this was really percolating right after New Year's when the whole Venezuela capture thing happened. So above 50 RSI again in oil since January 8th. This has been, a star of the year, still up. Rising 200-day moving average support ultimately lies there at $79. So did it get too stretched? Yeah, likely. That's typically what happens on a news-driven headline market. Overall, though, let me just back up the truck a little bit. I think this has to, I wouldn't chase this right now in terms of the ceasefire, right? The war trade is over for now in terms of the 2-week ceasefire. So I do think they let their foot off the gas, but I do think it just basically holds the line right around 120. It's 21-day exponential moving average, and it's not going to see much to do here. Down 11% today. Maybe you get down, this is going to contract, so maybe you get down 5% tops the next day, I would think, and then down 2.5%, and then a lot of flat days, up, down 50 bips. We'll see. That's what the charts look like to me, especially with the buyers in control above a 50 RSI. I don't think it absolutely goes to the floor. And again, really not a horrible looking candle here. Again, with the lows at 118 and we're at 123 here. So still seeing some relative strength in oil overall. I'm looking at, a 1-year time frame here. So that's oil. Wouldn't touch it here in terms of selling it. And in terms of buying it, I don't think that makes sense here. In 2 weeks, maybe. But right now, no. And then let's go to VXX. Always helpful to chart this to see where our, options being priced in terms of downside. Are we insuring at a premium or not our portfolios? So very important level, the 200-day moving average. I know some folks look at UVXY. I like VXX. The 200-day moving average updated live to the second is 34.52. We are underneath that due to today's 9% plunge. Here's the thing. Are we in an elevated risk environment? That's really going to be telling about, we're less than 3% away from new all-time highs in SPY. Do we get there or not? I think, in terms of probabilities, which is what we do here, I think this base is, and still has more bearish distribution in the next couple days, about 5 days or so, today being Wednesday. I think through early to mid next week, this finds a floor at around, don't forget, the lows are at 25.64 back in January 9th, about 2 to 3 weeks before SPY hit new all-time highs. Obviously, it does look like we're in an elevated risk environment in terms of volatility. The RSI at 46 here is the lowest it's been since Feb 2nd. So if it sounds like mixed signals, it's because it is. Where I'm looking at the chart right here, looks like it wants to base somewhere around that, right around this 31 level, potentially 3% down in the next couple of days. That's why earnings is important. The end of the ceasefire is going to be important. The next 2 weeks in the markets, if you thought today was a headache in the past couple of days, get ready. You're in for it. It's going to be a hell of an April. I know folks are uber bullish. We'll see. The all-time highs in SOXX, which we'll get to, is what makes me bullish. But there's lots of other, inconveniences, if you will, that we've been anticipating and seeing before with the flocking into South Korea, AI memory. SPY hasn't been the only, best game in town, and we are in an elevated environment here. So in terms of the chart, I think we dropped to right around 31. Like I said, another $1 or 3% or so to give in terms of volatility. It bases there. And then I think this wants to make another move potentially to 34. over the next 2 to 3 weeks, probably closer to 3, 4 weeks after the ceasefire, 3-ish weeks. And we'll see. Important level here, though, is the 200-day moving average is at 34.5. So if all we do in terms of VXX is get to that 34.5 level, I would say I'd rather lean bullish because we're in a more relaxed regime. Not the tranquility we had in, oh God, I missed that. Not the tranquility we had in January, but it would be a more subdued vol environment, which would be a tailwind for equities. All right, let's summarize the past 5 days. I know a lot has been about the past 12 hours, but let's zoom out. You always benefit from zooming out. When in doubt, zoom out. The best gainer of the past 5 days and the actual best trade overall, long, short in ETF land, EWY. These guys, it's up 13% for the past 5 days. Obviously, yes, 9% today. So when it's tech risk on, they're going right to South Korea, which is the AI memory capital of the world. And remember, I can't wait. I hope this breaks new 1 or 3 month high. So I would love to be involved. It's not quite there yet, but getting very close. The slower, more durable turtle system is the 3 month breakout. But this looks great here, up 9%, back at 59 RSI. Hasn't done that since 2 days removed of its highs. I think this has more bullishness to go. Decent looking candle here all the way to the upper Bollinger Band. VWAP is 138.63. It's above it here, up 9% for a country ETF is insane. Don't forget, Europe's up 5%. Don't forget, this is an AI memory, so this is risk on in terms of tech, a good way to play versus, Qs. And it's different hyperscalers, COPX in this. This looks strong. I think this has another week to go of bullishness. I think this targets, to be frank, right about right around $142 is where I believe. And like I said, don't forget, the highs are 154. My cursor is where I believe. So actually, the high today is at 141. I think we do a little bit more than that over the next, say, 5 days or so. So South Korea, it's a crazy moving ETF. I would probably just buy the stock, to be honest. The ATR here is 726. You double it, that is 14.5. Last I checked, it's wide. It's a huge ATR, average true range. So call it $15. If you get in, it's tough because of how volatile it is. Probably do 1.5 is better. So that'd be a $10 stop. So you could chase it right here at 139. If it moves to 129, get out, because there's a very strong chance it could move to 125. You want to save yourself that dough. But a great looking chart, even through all this tumult. Look at that. Rising 200 moving average hasn't been below the 200-day moving average since May, similar to that ASHR chart we looked at earlier. So this is what we're talking about, not like SPY that just got above the 200-day today. Those other markets, some frontier markets, some emerging markets, have really, really held their own very finely. So another alternative play for this, you can diagonalize and do, possibly you buy the May 145 calls and you sell April's. It's a risky trade. Right size the position. You could do that as well. But South Korea, I'm excited. Hopefully I get back in this one very soon on a more significant breakout here. The biggest gainer of the past. So again, up 13% in the past 5 days. Yes, I know most of that is from today, but that is the absolute killer on the board. Next are the SOXX. Super important. Micron's powering this. Taiwan Semi, Intel. If you're a semiconductor today, you're having a wonderful day. This candle is insane. Above the upper Bollinger Band. Look at this. Hasn't happened. And honestly, not like that. I'll give you credit. Back here on October 29th, we actually pierced above it, but not like this. Only thing that's a little bit strange, you do have a bearish divergence. You have a new all-time high, and you can't get the 65 RSI. Don't love that. It's kind of what I saw in oil the other day, and I said, be careful, from false moves come fast moves. This, seems to me we do have a couple of more days of upside. They're loving it today. I think it's literally hitting 369.89. It's hitting new all-time highs as we speak right here live. VWAP 367 is holding that by about 1%. Up 6% in SOXX is absolutely crazy. My target for this is honestly, it was right around 365 on the higher side. So it excelled that on VWAP basis, on a price basis right here trading live. After that, should the bearish divergence really be more insightful, I do anticipate a drop in this to 340 but that is still holding a 200-day moving average and would still just take you back to the 21-day exponential moving average. That would be the more bearish situation here. If tech earnings are still a few weeks away, but that would be that scenario. In terms of trades, again, beautiful 200-day moving average rising up and to the right. This one hasn't been in any kind of purgatory since June of last year. A 64 RSI eclipsing where it was from its former all-time high, February 25th. In terms of options trades, I mean, all-time highs always signals blue skies ahead. Or just we a little bit fearful of the bearish divergence, because usually when you spot them, it looks decent. Again, this has been green every day since March 31st. I know it's only 8 days, but that's a big trend. This can't continue, in perpetuity. So maybe it has another, like I said, 3-4 days. This is up 12% over the past 5 days of an average of 2% a day. Today, obviously gaining strength. I want to see what happens in the markets overall, not just today, but tomorrow and the day after. I do think they're going to flock more to the emerging markets and what was being successful in the market in January and February. SOXX still is a story of we need AI and all that. So the story's not going away, but just be careful if you're chasing it here. If you are to chase it here on ATR, it's wide. Of course, it's $13. So 1.5, we'll call it $20. If you chase it right here at technically 370, if it drops below 350, get out, because it's very likely headed to 350. I'm sorry, 335. So that's just a way to, it's like blackjack, rules of the book. Excuse me. But you do like to see the chart here absolutely resolving to the upside constructively. And then, Dr. Copper, huge. This is very important. Copper up 8% in the past 5 days. Yes, I know much of it is all today, 7%, but it has been etching a recovery here. And look at this. This hasn't fell on any kind of hard times also since last June, almost exactly like the SOXX. And yes, it peaked January 29th at 100 even, 99.99, but we'll call it what it is. Not a great looking candle in terms of the high being 84.20, and they said no thanks, we'll pass. And 82.67 is VWAP, and right now they said no thanks. So I always want to see the strength of the trend. Is it baked in? There's not much juice left to it, or is it gaining strength throughout the trading day internationally after the European close into the power hour of United States trading from 3 to 4 and so on and so forth. So we'll see what happens as we go on. But in terms of tactically going forward for the next 1 to 2 weeks, I'm not super. I don't love that they're rejecting it off of the levels of today. I know it's up 7%, and that's why, as a CMT, I look at this in the internals. I think this is kind of plateauing short term. This has been a hell of a rally going off of $69 for March 20th. That's when this began about 2.5 weeks ago. And trees don't grow to the sky. I haven't said that in a hell of a long time. Possibly, I just really think this has, significant resistance here at the 85 level where my cursor is. So does it have another $3 left in it? Yeah, possibly. But after that, I do think it will have to take a breather. And then it very likely rests down to $77, $78. So a lot of mixed pictures here. Top 3 losers of the past 5 days. I'm not going to hammer this, but number 1 is VXX, down 10.5% over the past 5 days, about 2%-ish a day. Obviously, much of it coming today, down 8%. Just another thing on here, that fear came on March 27th, March 3rd. We actually peaked in fear in an intermediate basis. March 30th, basically we'll call it $40 here, and boom, very quickly we are down to $32. So I already gave my forecast on this. VXX sub 50 RSI for the first time in weeks. Okay. Let's look at other losers. I got stopped out of this morning at my stop level, so that was kind of a gift. Oil started to creep up a little bit higher here. Don't forget, we bought this on the all-time high the other day. A breakout's a breakout. That was, so yesterday was the high of this, 55.66, and very quickly, this went all the way down to $45 in one day. And now look at this. You typically buy hammers like this, just so you know. You look at this candle. View up on the day is 46.93. They said, give it to me. The low of the day is 45. They obviously said that. And it just hit a new high of day. I know it's down 11%, but high of day is, meaningful. And right here, look at that. 49.99 RSI. I'll round up. That is 50 RSI, where it has been since January 8th. So they've been rotating into this asset. This is Brent oil. And again, in terms of the chart, messy. I mean, when you have an all-time high 24 hours ago, and then you slip all the way to the lower Bollinger Band within a rock's throw away of the 50-day moving average, life comes at you fast. Right here, I do think it's complicated. I wouldn't, bet on this, and hence why I got stopped out and I closed it. I'm not entering right here. But in terms of the chart, it could have a soft upwards rally. Again, this has been down an average of 2% a day. I know, all-time high yesterday. I'm doing averages. And today's down 11%. Want to see that contract. I really want to see what happens tomorrow and the day after. Is it down 5% tomorrow, which is what I suspect, or flattish, or is even up 40 bips, something like that. So it's going to be very telling. The chicken money flow on this has been absolutely stellar since Thanksgiving, and it's been kicking SPY's butt since Feb 1. So I don't want to abort successful assets like that on one day, even though obviously down 11% is massive. And again, when all settles, if this just holds the level for me, if this holds $49 in the next coming days, the 21-day exponential moving average, you should still be in some kind of energy exposure should this hold 49. It's trying hard today. It's got $1.50 to go to get to that level. All moving averages still going up. Really, it just got too far too fast. And that is exhibited right here from February 27th to March 20th. About 3 weeks of overbought. Typically, those things kind of, it's not a hot air balloon, just up and away. They do come down eventually. And today you had a news-driven headline to do that. So 1 minute, you're talking about the end of a civilization. And then literally hours later, 2-week ceasefire. So again, life comes at you fast could have been the name of the video. And then the third biggest loser, also energy related, of course, is the XLE. Down 6.5% over the past 5 days, or 1% or so a day. Look at that. They gutted it right here to the 50-day moving average, and they said, I'm going to buy it. The RSI here is a little bit weaker. USO stronger, BNO stronger. The energy complex is, losing a bit of that, that bid premia here. Decent looking candle. It is above VWAP here. It is down an ugly 4%. As I said, I suspect this base is in the next couple of days. It could have done it already today. I'm not so sure, though, because dust settling, it seems to be the name of the game. And I think sellers are in control as we are sub 50 RSI. I think this base is around the 56 handle in the next several days, as I said earlier. And then it does etch not a straight line linear move to 59, but I do think it does that. Could happen faster than expected as well. So I do think energy, don't rush into it here. I do think it's going to base and still deserve a part in your portfolio, probably closer to, when we get into the end of this month. Okay, top 3 trades of the past 5 days, including up to the second right here after the ceasefire. Long EWY, long South Korea, long SOXX, the semiconductors, the differently equal weighted, basically, not the heavy NVIDIA one. And then short volatility has been the name of the game. You've absolutely dominated this market if you're in those 3 trades. All right, we will try to be back with a video on Friday. Just because things are so crazy, I might do, the 4 o'clock recap for that one because it's been a heck of a week. All right, good luck out there, and peace.